We have Varun Goel also joining us from Nippon AMC's PMS. He, of course, handles that at Nippon. Varun, good afternoon. Thank you so much. We are starting off with the result season. What are your own expectations? Going to be a healthy, good result season, or do you think margin pressures will be seen? But at the same time, a lot of sectors like autos, like home improvement, have actually started passing on this price hike. Will it cushion their margins?
Good afternoon, Ajay. Thanks for having me on the show. So our sense is broadly the Nifty companies should deliver around a 20% YoY growth in profits. Of course, the first half of the year was very strong because of the low base effect of last year. So we had a 34% growth in profits in the H1. Our sense is H2 would be a little more subdued in the sense that we had a very strong base of last year with Q3 and Q4 saw good recovery post-COVID lockdowns in the second half of FY21. So this time we believe we should see 15 to 20% growth in profits for this quarter and the next quarter. Overall, we should still end the year with somewhere between 25 to 30% earnings growth. As far as various sectors are concerned, we do believe that banking would be the leader as far as this quarter is concerned. We expect very, very strong earnings growth, considering the fact that a lot of banks have already done quite a bit of provisioning related to COVID, and we believe some of those provisions would be reversed. Also, gradually the credit growth is coming back, so we believe that the banking sector should be delivering very strong earnings growth. As far as the margin picture is concerned, yes, for some of the manufacturing companies, let's say sectors like cement, we would see a subdued profit number, considering the fact that raw material cost has increased quite a bit, although it seems to be getting better now. If you look at the commodity prices, various metals, we have seen the peak of most of them sometime in the middle of last year, and things seem to be getting better, and also companies have been passing costs. So our sense is sectors like FMCG, Pharma should deliver somewhere around 10% earnings growth. IT might do a little better, considering a very, very strong earnings growth momentum. But overall, we expect a healthy growth environment as far as this quarter is concerned.
Varun, what did you make of this IT last 7-8 days? A big drubbing. Today it's come back. But was it just profit taking, or do you think bulk of the positivity in earnings, etc., have been built into the valuations? Or do you think that once numbers come out, market will take a relook at it?
Well, I think IT is in the middle of a very, very strong capex cycle. A lot of companies globally are spending a lot of money to upgrade their IT systems, considering the fact that Corona has hastened their movement to a new IT infrastructure. So we believe that the high growth environment for IT companies should continue. Most of the tier 1 companies should see 12-13% kind of revenue growth in the next financial year. In our sense, the mid-cap companies can see even higher earnings growth, somewhere between 15 to 20%. So the growth would stay. Some of the margin gains that they've seen in the last year might get reversed as the COVID situation eases, and you have costs like transportation and all, and sales and marketing coming back into the system. Having said that, the earnings growth momentum should still continue to be quite robust. I think there is a fear that as the interest rates increase in US, we have seen the 10-year bond yield crossing 1.8%. So some of the arguments about multiples being high because of the low cost of money, some of that could get challenged going forward. So we don't think there is scope for further multiple expansion, but earnings growth as such should be okay. And we believe IT should continue to be outperforming sector in the coming year.
Oh, is it? What are your thoughts on this entire telecom sector? There are 2.5 companies there, and one of them, of course, government has become the large shareholder there. But telecom overall as a business, do you see ARPUs for this quarter buoyant? Other things also playing out. There were tariff hikes taken. How do you see this segment?
So I think telecom is coming back after almost 5 years of very intense and fierce price wars. I think we are going to see significant increase in ARPUs over the next 2 to 3 years. As you rightly mentioned, we have only two and a half players now, and we don't know how the situation will play out in the next 2 years. So we have already seen 20% increase in ARPUs in this financial year. Our senses ARPUs are still quite low. I think at an industry average somewhere around 130, 135 rupees. We see them going to at least 200 rupees in the next, let's say 12 to 24 months. And this increase in ARPUs will directly come to the EBITDAs of the players who are left now. So I think the profitability would see a significant bump up. Our sense is amongst the large cap space, telecom is one sector where we see a very large possibility of absolute returns in the next 1 to 2 years.
One of the players which also has large retail in its business. You have a lot of that in your portfolios, as I can see. How do you see some of the other group companies of big group, I would say? The VCF business company, cement as a space, there was some amount of hangover there, that if overhang, that if Vodafone would have to be helped by group companies, then the balance sheet would have been stretched over there. That is not happening. So there is some amount of relief there. As a money manager, how do you see those other businesses of the group, Hindalco, Grassims of the world, Ultratech, just for the segment?
Yeah, so overall, if we look at the telecom space, I think we have come to a stage where things are getting settled. I think now there is clarity on which would be the players which have a strong balance sheet and ability to spend, and which would be the players which would survive but may not actually thrive. So I think as far as telecom space is concerned, the uncertainty is largely behind us, and I think the capital structure of all the three players is now fairly clear. So from that point of view, as I pointed out, telecom sector should see significant growth in profitability going forward. As far as other businesses are concerned, I would think that cement as a space, while it should see some short-term headwinds because of commodity price increases, overall we should see 8 to 10% demand growth in the next 2 to 3 years as the infra and the real estate cycle picks up. As far as discretionary spending is concerned, we are seeing some pressure, and now with the new wave of COVID, the consumer discretionary spending might get pushed forward at least by 1 quarter. So there could be some concerns on that side. But overall, our sense is with the way things are and very minimal lockdowns that we are seeing in the third wave of COVID, overall the staples demand should continue to be okay. The IT and the pharma sector should continue to do well. The retail demand may get pushed back a little bit, but hopefully as the Omicron situation gets into control, we should see better days ahead for them in FY23.
Varun, what have you been adding in your portfolios in the last couple of months in terms of themes and plays and businesses, not stocks?
Yeah, so I think the outlook for the real estate sector, especially on the residential side, continues to get stronger. What we have seen in the last 12 to 18 months is that the inventory situation at a pan-India level is getting a lot better. I think when we started 2020, pan-India inventory numbers on the residential side were somewhere between 2.5 to 3 years of inventory. Now, as we enter 2022, the inventory picture is a lot healthier. I think on a pan-India basis, we are looking at let's say 18 to 24 months of inventory, which should lead to a lot of new project launches, which should lead to increase in pricing power by most of the developers, since a lot of the inventory seems to be getting absorbed. So our sense is sometime during this year, we should start seeing price hikes by the residential real estate players, which should definitely do a lot of good for the profitability. Also, with a very significant increase in salary, especially in the IT sector, we were doing some numbers. This is the highest salary hike that the IT sector has seen in the last 15 years, right? So, which should all get reflected in the discretionary consumption and the purchase of houses and some of the other luxury items, especially by the 50 lakh strong workforce in the IT space. So, we believe that real estate and the ancillary sectors like housing finance, tiles, wires and cables, some of these sectors should be a large beneficiary of the revival in the real estate cycle.
Right. All right, Varun, we'll let you go on that one. Thanks so much for your inputs and your thoughts today. Time for a short break on the